So let's start with the jobless numbers. 6%, a little bit disappointing. Average earnings are up. Anything here big enough to sway the bank?
I don't think so in the short term. I mean, the headline figure, 6%, is maybe less important than it previously had been perceived, and that's really on the back of the behest of the Bank of England anyway, shifting their focus away from that as being one of the barometers. So these earnings figures are arguably more important. You still think they're going to look for something a little bit more impressive than what we've seen this morning, a move in the right direction, but I think all of us could do with that little bit more in our pockets ahead of any interest rate rises.
All right, I ran through reactions to the bank fine. Clearly that's the talk of the market this morning, or at least among several of the big stories. Why was Barclays not included in this?
Yeah, an interesting question. I certainly haven't heard any rumours as to anything extraordinary with which they've been affiliated. It just looks like one or two intricacies have kept them off for the short term. I think we're going to hear about that in a pretty swift order, though.
Should we be jailing a few key traders rather than fining bankers?
Well, look, the focus is very much on companies today, but in amongst all of the statements being made, it does seem that the focus is going to shift to specific traders in the very near future, and I think there's going to be a lot of worried seats around the city, not just here in London, but around the world. It looks like this is something that regulators are going to get their teeth into, not just here in the UK, but in the US as well, and this story could roll for quite some time. You do feel that reputational damage could well be a little bit more aggressive than some of the fiscal fines we've seen announced over today.
I want to get your take on Sainsburys. As I said, I spoke to John Rogers, unsurprisingly upbeat when he talks about the way Sainsburys are tackling things, but no change really on the dividend. The shares are down. Are you surprised by any of this?
Yeah, I mean, look, the food retailers have had a good little run in the last week's worth of trading, so maybe a corrective pullback, not necessarily anything to get too worried about. An impairment cost of £628 million, slight surprise, but nothing in the same sort of leagues as, say, Tesco's. But I think one of the things that's going to be particularly interesting in this next quarter, the Christmas sales period, is how much of a market share those smaller firms, the Aldis, the Lidls, might be able to eat into the big four. I think the sort of snobbery of the UK shopper has been eroded somewhat over the last year or so as belts have been tightened, and I think the previous perceptions about using some of these shops to do the weekly shop is less of an issue these days than it used to be. Certainly as well, we're seeing quite a few sort of loss leading things being posted, the likes of Lidl and Lobsters on sale and what have you. I think these loss leaders might get footfall increases through the door, and it'll be interesting to see how much of the market share the big four can hang on to.